Hey, it's Charlie from Tax Cure. In part two of our interview with Herb Cantor, a former IRS revenue agent and appeals officer, we discussed things such as IRS audit red flags, as well as the types of penalties that can arise from an IRS audit. So let's get to it. So Herb, what are some IRS audit red flags with a business or individual tax return?
The red flags would be, well, people omitting income from their tax return that, for example, somebody not including a Form W-2, a Form 1099 on their tax return that the IRS knows about, but the IRS cannot find it on your tax return. That's a red flag. Another red flag, basically where I used to work, it's a revenue agent, is people showing or having a business and showing a net loss every year. That's not to say it's not correct, but when you have a loss every year, the IRS is saying, well, wait a minute, why are you in business? Why are you generating a loss each year? And I have cases like that too, that I'm defending these people before the IRS and trying to get a somewhat favorable outcome for the client. People that claim expenses that are very high, people that are claiming, not so much now anymore, charitable contributions, people that make 50,000 a year and have charitable contributions of 40, 50, 60, 80, 100,000. That doesn't mean it's not right, but the IRS is going to look at it because it looks odd. So I handle a lot of those cases. People that have large penalties, quite often they come to me and say, look, we agree with the tax, but I don't agree with the penalty because the tax may have been, they're trying to blame it on their accountant, they're trying to blame it on everybody else, and maybe the penalty doesn't really not apply. So they'll hire me to say, yeah, we agree with the tax, but not the penalty. And quite often the penalties that I've had so far have been upwards of 150,000, and I've gotten a lot of them removed, even though they're a large dollar amount. So that's what you have to consider. I mean, I'm not going to look at a penalty for a couple $100, but if you owe 10,000, 50,000, 100,000, or even more, then it's worth for me to look at it, and I'll determine, hey, if I can help you, that's great. And even when I take a case to appeals, when I was an appeals officer, I would settle cases on a percentage, and we can do that in appeals.
Herb, what are some potential penalties that can arise from an IRS audit?
The primary penalties that we see are usually the late filing, people filing late, and there's no extension that they filed. The penalty is 5% a month up to 25% if it's 5 months. If you file 8 months late, it's still going to be the same, 25%. A big penalty that we see a lot is the accuracy penalty, which is 20%. The IRS will almost put that on, even if it's not a real negligence type penalty, which is what the accuracy penalty is. The IRS will still put it on, and they make it very difficult to remove it. And also, when I worked at the IRS, there were a few other penalties that I saw, which was the fraud penalty, civil penalty for fraud, which is 75% of the tax, which is a very severe penalty. I also worked the IRS preparer penalties, and I saw a few penalties against CPAs where the IRS agent thought that the preparer, a CPA, they basically committed fraud, and or they really did something very severe. It was like a negligence. So I would handle those also in the IRS.